Welcome. In this video, Zbcn coin has started to rise. Will the price rise further? We will analyze it. Don't forget to subscribe and like, and please watch to the end to understand.
First of all, seeing that the price is moving within an uptrend is a very important indicator for investors, because uptrends indicate that buyers control the market and that the overall direction is upward. In an uptrend, prices remain above the previous low each time and progress by forming new highs. As long as this structure is maintained, the trend's strength continues. If the price continues to bounce upward from this trend line, meaning that it receives support from the trend line on each pullback and sustains its upward movement, this is a very strong signal that the uptrend will continue, because the price approaching the trend line and bouncing upward from it shows that buyers are still strong and that sellers have failed to push the price downward despite their attempts. In such a situation, technical analysts observe that the trend line has not been broken and anticipate that the uptrend will continue, which in turn increases buying appetite in the market. One of the most important aspects of uptrends is market psychology. When people see that the price consistently finds buyers at higher levels and does not close below the previous low, they perceive the market as healthy and strong. This psychology leads more investors to open long positions, supporting the upward momentum of the price. Especially if the trend line has been maintained for a long period, investor confidence increases, making the unbroken trend line even more significant. Long-standing trend lines are considered stronger in technical analysis, and investors place more value on them. If the price bounces upward from this point, it confirms the trend's solidity and creates strong expectations for continued upward movement in the market. In such a scenario, volume is another factor to watch. If the price bounces upward from the trend line and this movement is supported by a significant increase in volume, the case for a continued uptrend becomes much more convincing. In technical analysis, volume is one of the most important elements confirming the strength of price movements. Bounces on low volume can be weak and may struggle to push the price back toward the trend line. Conversely, a high volume bounce shows that buyers are much stronger and supports the continuation of the trend. Another critical point is the sense of security that the unbroken trend line provides to investors. Each trend line demonstrates that prices are moving in an organized pattern, and as long as this pattern is intact, market expectations remain consistent. The price bouncing upward from the trend line shows that this structure is maintained. As investors observe this, their confidence in the market grows, and they execute new purchases. For traders using technical analysis, bounces from the trend line are considered one of the best buying opportunities. If the price does not break this trend and continues to bounce upward from the trend line each time, the uptrend strengthens. This is because sellers' attempts to push the price down fail. Even when sellers try to drive the price lower, buyers step in each time and push the price back up. As this cycle continues, the upward momentum in the market becomes more robust. Each bounce reflects how strongly buyers defend the market. Therefore, maintaining uptrend lines in technical analysis plays a critical role in understanding future price movements. In this situation, the prevailing expectation in the market is that the price will reach higher levels as long as the trend line remains intact. Because the trend remains unbroken, the existing momentum continues strongly. Many investors follow the principle that the trend is your friend and continue buying when they see that the trend line is holding. Increased buying contributes to moving the price even higher. Thus, the price bouncing upward from the trend line generates not only a technical signal, but also a psychological expectation of a strong uptrend. Bouncing from the trend line in an uptrend also provides insight into potential future highs. As long as the trend is maintained, the price attempts to surpass the previous high each time. Therefore, if a new upward wave begins after a bounce from the trend line, that wave generally aims to exceed the prior high. In this way, the price gradually moves to higher levels, maintaining the trend's strength. Investors follow these movements closely to take advantage of the opportunities offered by the trend. It is also important to emphasize that an uptrend line is not just a technical line, it's a visual representation of the supply-demand balance in the market. A bounce from this line indicates that buyers have overcome sellers. If the price does not break this line, buyer dominance continues, which ensures the continuity of the uptrend. In technical analysis, the most important factor is whether the price maintains this trend line, because as long as it is unbroken, the uptrend is expected to continue. In conclusion, the price bouncing upward from the uptrend line is one of the most important signs confirming the trend's strength. The continuation of this movement shows that buyers are still strong and that the uptrend remains intact. If the price does not break the trend line, expectations for further upward movement strengthen. This supports the market technically and psychologically, helping new purchases come in and sustaining upward momentum. As a result, the price continues to reach higher levels, and the uptrend maintains its healthy presence. But we can't base our analysis solely on trends. Let's also look at other metrics. Stay tuned.
The fact that the price is currently just below the 200 EMA is a very critical situation from a technical analysis perspective, because the 200 EMA is one of the most important indicators of long-term trends and is widely used by investors to understand the general direction of the price. The 200 EMA is considered a reference point showing long-term trends, especially on weekly and daily charts, and by observing whether the price is above or below this level, it is possible to interpret whether buyers or sellers have the upper hand in the market. While the price is trading just below the 200 EMA, a short-term pressure or slight downward tendency may be observed, but this does not always indicate a permanent trend change. On the contrary, such minor deviations often do not prevent the continuation of the long-term trend and can create opportunity signals in the market. If the price moves back above the 200 EMA and manages to hold at this level, the long-term uptrend can become active again. Staying above the 200 EMA is considered a strong buy signal for investors, because reclaiming this critical support level indicates that buyers have regained strength and sellers' pressure has decreased. Technically, this signals that the price will exit the previous decline or consolidation phase and gain upward momentum again, providing long-term investors with an opportunity to enter the market with confidence. The psychological impact is also significant. When the price stays above the 200 EMA for a long period, investor confidence increases, boosting buying appetite. Even if the price drops below the 200 EMA temporarily, most investors perceive short-term pullbacks as part of the long-term uptrend. However, when the price moves back above the 200 EMA, this creates strong buying pressure in the market, both technically and psychologically, encouraging investors to take long-term positions. Thus, the price can demonstrate not only short-term gains, but also a long-term and stable uptrend. From a technical perspective, the 200 EMA plays a critical role in determining support and resistance levels. When the price remains above this level, aside from short-term fluctuations, the market is generally considered to be in an uptrend. In this case, investors form expectations that the price will move upward in the medium and long term. If the price falls below the 200 EMA, this is often interpreted as short-term pressure or a correction. However, a subsequent move back above the 200 EMA is a strong confirmation that the trend will continue. Therefore, holding above the 200 EMA is a critical factor for long-term uptrends and is regarded as a reliable signal for investors. For evaluating long-term growth, the price approaching the 200 EMA and bouncing upward reflects fundamental market dynamics. This movement indicates that buyers dominate the market and sellers' pressure is limited. If the price successfully stays above the 200 EMA, the market strengthens and the potential to move to new highs increases. This presents an important opportunity for long-term trend-following investors in terms of both risk management and potential gains. Additionally, holding above the 200 EMA when analyzed alongside other technical indicators further supports the strength of the long-term uptrend. For example, if momentum indicators such as RSI or MACD also give bullish signals, this confirms the sustainability of the upward movement while the price remains above the 200 EMA. In this way, investors can take positions with confidence both technically and psychologically, obtaining strong evidence that the long-term trend will continue. A move back above the 200 EMA also reflects the overall health of the market and the direction of the trend. Since the 200 EMA is a long-term average, price action above this level increases long-term investors' confidence in the market and leads to more buying positions. This ensures that the price moves not only with short-term fluctuations, but also in a long-term stable uptrend. In conclusion, the price moving back above the 200 EMA is a critical signal for the restart of a long-term uptrend from both a technical analysis and market psychology perspective. This movement shows that the price has recovered from previous corrections and that buyers have regained control of the market. If the price manages to hold at this level, the long-term uptrend is expected to continue strongly, creating new opportunities for investors. Thus, a price that holds above the 200 EMA provides a reliable foundation not only for short-term gains, but also for long-term and sustainable upward movement. This situation offers investors a chance to enter the market with confidence, both strategically and psychologically.
The falling wedge pattern is one of the most important price structures in technical analysis and requires careful monitoring. This formation generally occurs when the price moves within a narrowing range and becomes squeezed between upper and lower trend lines. As the name suggests, in a falling wedge, the upper line forms a downward sloping resistance, while the lower line also slopes downward but at a lesser angle, creating a support level. As the price moves between these two lines, volume typically decreases and the market calms, requiring patience from investors. However, the critical point of the falling wedge is when the price approaches the upper line. This upper line is the most significant indicator of a potential breakout, and when the price nears it, strong signals about the market's potential movement are generated. When the price approaches the upper line of the falling wedge pattern, it indicates that buyers are regaining strength and sellers' pressure is diminishing. Technically, if the price breaks above this upper line, the falling wedge pattern is completed and a significant movement begins in the direction of the breakout. This breakout generally causes the price to advance more quickly and strongly compared to previous fluctuations because the accumulated energy and compressed market conditions during the formation give the price strong momentum at the moment of breakout. Investors consider this breakout the most critical point of the pattern, often triggering the opening of buy positions. After the breakout in a falling wedge, the price target is calculated based on the height of the formation. That is, once the upper line is broken, the price can rise by the distance between the upper and lower lines at the start of the formation. Technically, this corresponds to approximately a 170% increase. This target serves as an important reference for investors in developing both short-term and medium-term strategies. Reaching this target indicates that the uptrend following the breakout of the falling wedge is strong and sustainable, allowing investors to manage risk and plan potential gains. From a market psychology perspective, breaking the upper line of the falling wedge is highly significant. This breakout shows that buyers have established dominance in the market and sellers can no longer exert pressure. Technically, the price compression and declining volume during the formation indicate that investors patiently waited up to this level, and a strong buying appetite emerges at the breakout moment. This allows investors to enter positions confidently and follow the trend accurately. The falling wedge pattern is not limited to the technical aspect of the price breaking the upper line, but also carries significant importance in terms of market dynamics and investor behavior. Typically, an increase in volume is observed as the price breaks the upper line. Rising volume strengthens the reliability of the breakout and increases the likelihood of the price reaching its target. At this point, investors can reinforce their positions and optimize strategies by considering the pattern's projected 170% gain. In short, the falling wedge pattern is a critical structure where the price is compressed within a narrowing range and approaches the upper line. If the price breaks above the upper line, the formation is completed and a strong upward movement begins in the direction of the breakout. The target for this increase corresponds to the height of the formation, representing approximately a 170% gain. From both a technical analysis and market psychology perspective, this breakout allows investors to take positions confidently and can be seen as an indicator of a long-term uptrend. The patience observed during the formation, along with volume increases and momentum indicator signals, reinforces the strength of the price at the breakout and its potential to reach the target. Thus, the falling wedge pattern provides investors with both strategic and psychological opportunities to act in the market, and the price breaking the upper line becomes significant as a signal of long-term gains and a strong trend. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.